Good afternoon and welcome to Markets Today. I am your host, Miss Mbithe Mwema. We have a very exciting lineup of events for you today. A lot of numbers have been coming through. We've seen Standard Chartered announce first half 19. We've seen Britam also announce its numbers, and also TransCentury, which has reported a profit. So we just want to see, do all these positive numbers actually trickle in to the investment case that we are actually seeing traders buying into the NSE? To help us with this conversation is Mr. Geoffery Odundo. He is the Chief Executive Officer of the Nairobi Securities Exchange. Welcome to the show, Mr. Odundo.
Thank you, Bithe.
How are you doing this fantastic afternoon?
Great. I think I'd always say that the market is open for business.
It's open for business. Let's come make some money.
Pretty warm.
Okay, that's fantastic. I think there's a lot of excitement. There are a lot of new products. But I wanted us to just start from the very basic. When we're looking at the NSE, the Nairobi Securities Exchange, what is it in summary?
So the Nairobi Securities Exchange is basically the platform or the market in which financial securities are exchanged, right, traded.
Okay.
So an investor who wants to buy into a share of a company is able to do that through our platform, which is the Nairobi Securities Exchange platform. Okay. So we have got, they all go through their brokers who are members of the exchange, and then the tradings happen on this platform. Okay,
over 50 years now?
65 years.
65 years, oh wow, then it's certainly way ahead of my time. Very exciting. But then last week you did have a briefing where you announced how the market has actually done. And we saw about 78 billion was traded in turnover, slightly lower than what happened last year. What's really going on? Are people excited? Are people losing money? Are they opting to pull out their funds from the NSE?
Right. So we had an outlook review media briefing, which essentially what we're trying to communicate is how the markets are performed and what are the real factors driving that. I must say that what we experienced in the first half of the year has been pretty much a market sort of slowdown, largely because of a number of things.
Okay.
A lot of this is attributable to a lot of factors external to us. For instance, the rising interest rates in the first half of the year in the U.S., a bit more competition from the bond market asset class, domestic investors putting more of their money into the money market.
Okay.
And so that sort of had a knock-on effect on what happened to our market. But having said that, it's not been an issue of outflow of capital. Okay. More like investors are saying, these prices are too low for us to trade, let's hold down.
Okay.
So we're not seeing capital flight. All we're seeing is just a reallocation.
Because on the converse, the fixed income market did extremely well in terms of turnover. So was it really like a amount of monies that were actually leaving the equities and moving to another asset class?
No. Okay. Predominantly, I think if you look at the domestic, what's driving the fixed income market is the domestic institutional pension fund participation. And these funds are growing every year. I think on an annual basis, the pension fund sector, for instance, is doing something in excess of 300 billion a year in terms of growth. Now, using that number, when they are looking at asset allocation, their focus right now is on the money market side. So they're putting more money into the bond market. Okay. And we are getting the resultant effect of a very active secondary bond market because the primaries are active, so definitely secondaries are active. So the issue around it's not money that's leaving the equity market. It's more than new money is going into the bond market. New money is going into
the bond market faster. Jeff, we can't get over this. NSE 20 is almost on a 10-year low. And every day we keep looking at it and wondering, will we get over the 2,500 mark or not? I mean, what do you make of this? Are we losing money? Are we making money?
I think these are very, very interesting times, I must say. I've been in this market for 21 years.
Wow, 21 years.
Yeah, and I can tell you, this is not the worst I've seen. These are very cyclic nature of markets, where markets go into different cycles depending on the economic factors and a number of other factors going on. So I think it's just the normal market cycle. It could have been a bit more depressed this time, but ideally what I do say is that presents a good entry point for investors. I mean, anybody looking at the market today, we are trading at multiples that we have not seen in the last 5 years or so. So this is a good entry point for investment. So I do say this is going to be, for me, this is a very, very fairly normal trend. So I do expect to see recovery fairly shortly.
Okay.
But having said that, it's something that we're not very happy to be. It's not a situation we like. Because what happens in our markets is that investors normally want to sit out when markets are down
Exactly.
and come back
and
when
then
the markets
everybody
are up.
comes back when it's going up.
Yeah, so it's more of managing the situation.
Okay.
I think what has excited us is that the turnovers have been pretty fairly good under these circumstances. We are still seeing a lot of good turnovers. On average, for instance, we do on some days $1 billion shillings.
Yes, the trajectory has become better over the last 1 month. What can you say has actually been driving this?
The foreign investors are pretty active.
Foreign investors,
They're reading the numbers and they're saying, well, on a global scale, right now there are negative yields in Europe, the US.
Yes, that's true.
So where can I get yield?
Okay.
And they're coming back into the frontier markets, and so pretty that's much more to driving interest back. Okay. So we believe that they'll probably provide the direction, and our domestic markets should be able to respond.
So foreign participation is driving it. Lower asset yields in the global markets is also another key driver. Do you have a sense of where the bulk of the inflows onto the NSE are coming from? Because we've seen a lot of movement in Safaricom. Would you say it's North America? Would you say it's Southern Africa? Would you say it's Europe? Are you able to classify it in that context?
Yes, we do. We normally do see, we carry out sort of a profiling of the markets. And I must say, majority of our investors are in North America.
Okay.
And partly in Europe. And these are basically the global funds who trade in the emerging and frontier markets. So they pretty much drive volume across the board. Though we have investors who, new markets are opening up in the Asian continent, some markets in Africa, not just South Africa. Okay. We're seeing a bit of West Africa trading into Kenya.
Oh, that's Nigeria, Ghana?
Nigeria.
We've seen Ghana coming in?
Ghana is coming through.
Okay. Is it individual investors or is it pension funds or institutions?
Pension funds, yeah.
Okay.
Yeah. And not forgetting the regional markets.
All right.
Kenya gets a good inflow of money, especially from Uganda.
That's true.
The pension fund. So I think it's across board, which helps us with the concentration risk, again, when it comes to the investment pools. So it's pretty wide. So we're very, very fairly confident, because on a daily basis we're seeing a net buy side, which speaks a bit of confidence into the market.
Is it confidence into the market, Jeff, or is it confidence into Safaricom?
Not Safaricom, I must say.
It's about 50% of the traded value and also the market cap as well.
Well, I think that's a situation of big companies, and I must say one of the things we're keen on is to see more big companies listed, so we can concentrate that what you call a concentration risk. Yes, Safaricom definitely drives appetite. One, because it's more liquid, and again, it's a company with a very high growth trajectory. So, but we do see also the banks and some of our manufacturing companies are pretty attractive. So I think the top 5 constituents, the big 5, fairly even right now. Okay. I do anticipate that we'll see better numbers after the half-year results are complete, and you'll see probably a different change in the investment complexion a bit.
Okay. Yeah. So what you're saying is we are having foreign investors coming into this market because of lower yields, but then their focus is really centered on companies that have a lot of liquidity. So that's Safaricom and I think
the 3 big banks.
The 3 big banks, so Cooperative, okay.
A bit into breweries, and some of the insurance companies like Britam. Yeah, so it's sort of touching fairly strong fundamentally companies, which you see the investors are very have got certain investment criteria. So for them, they will not invest in a company where they can't get a certain size of float.
That's a very good point.
So they're keen on also companies that have got a large free float, because they don't want to get into very tightly held companies because of the exit opportunities are not that easy.
That's very interesting. So, Jeff, for a retail investor who's possibly watching this, would you be telling them to actually follow a similar strategy or at least use that as a benchmark?
Well, I think it really depends. Fine, normally is fine. Retail follows institutional. That's pretty much the trend. But I must say, for a retail investor, they still have very great opportunities. You would not be able to possibly afford a very high cost stock like BAT, for instance.
That's true.
So we do have some other single or double digit stocks that are still very, very valuable and good companies fundamentally. So I think it's really on the affordability side. I think they would focus more on the lowly priced shares, where you can get more value in the fairly short term. But again, getting an exposure in where everybody is pretty not bad.
It pays. Yeah. It pays to have that.
But speaking about that, I don't think there's I think all the companies on the exchange are fairly good fundamentally. Otherwise, they would still not be standing.
That's very true.
A few are going through challenges,
Okay.
but those are being addressed.
All right.
But at a scale, I think allied numbers are pretty good for investments.
Okay, so then what you're effectively telling us is this board is about to start turning green. The majority needs is about to start turning green. We just need to get in before.
Today it's a bank holiday in the US.
It's a bank holiday, so
it speaks about the colors.
it speaks about the colors.
Yeah,
Okay, fantastic. I think we shall take a short break and look out for the closing bell. Don't go anywhere. When we come back, we want to discuss the outlook, the investment opportunities that you should look out for, as well as new products, derivatives and futures. What is happening there? Don't go back. Stream live on our YouTube page, and that is Metropole TV. See you shortly.